Good morning once again from our weekly brief. Nour, we have a lot of things that are happening this week, same as every week. I think this is going to continue for the end of this year.
Right.
As we say, there was an early Christmas gift that Jerome Powell gave to the market, and we saw the effect of the last meeting, of Jackson Hole meeting, on the market. We've seen the dollar getting weaker. Now
Hmm.
we are much more sure that the intervention will happen, and they're not in a hurry. They are still waiting for more data, for better data. I think now the PCE is going to make a lot of difference when it comes out,
Yeah.
and there's more confidence that we saw this time in the speech of Jerome Powell. So we've seen, or if we take a look at the chart of the dollar index, we can see dollar index is at 100.66, which is a low that we didn't reach since a very
Hmm.
long time, to be
Yeah.
honest. So since December last year, we didn't reach these levels, or even before that, since
Sure.
July
Yeah.
2023. So this has affected, or this make a big impact on most of the currencies, and the currencies that we discussed. That's the beauty of that of
Hmm.
this uh, of this weekly meeting that we do. So a lot of currencies that we discussed with a lot of support and resistance, we reached those levels. We have new levels at the moment. So, for example, I'm looking at dollar yen. We're expecting Bank of Japan to drop as well. I'm sorry, to increase the interest rate, and we know
Yeah.
that Jerome Powell is gonna basically decrease the rate. So both of these indications, dollar yen should drop in a huge way, but we still can't
Hmm.
see it reacting that fast or the same way that it reacted before. Can you give me the next resistance that you have in mind for dollar yen? Is it still the 141.70? And what's next?
Yeah. Yeah, so I mean, at least Jerome Powell gave us a clear indication that it is time to adjust policy. Adjusting policy, of course, means that they will have to start cutting rates. Now, from now until September, we still have about a month until the Federal Reserve, or less than a month, until the Federal Reserve decision, and we have a lot of data from now until then. And this is basically what will decide the amount or how large the interest rate cut would be, if it's going to be 25 basis points or it's going to be even more. For the time being, at least, the Fed fund futures are just only basically pricing in only about 37% chance of a rate cut of 50 basis point by the Federal Reserve, while it's over 100% when it comes to 25 basis point. Now, this week we have a lot of data when it comes to also GDP. We have the jobless claims, we have the core PCE price index. So all these data will definitely give us at least another reason if the Federal Reserve will be able to cut more than 25 basis point. Now, for the dollar yen, especially after the move that we saw in the dollar index, dollar yen still remains within the same range over the past 2 weeks. However, for the time being, I mean, dollar yen, the next resistance that we have to keep an eye on is the 143 that we almost tested it earlier during the Asian session, but a break below that will deepen the bearish outlook, and then you have the 142, which is the last low after the carry trade exploded but at the beginning of this month. Beyond that, it would be 140, and then I would say it would be a little bit even open
But
because now
the
a
question
lot of
is,
hedge funds are talking about 1.37.
would we still see the same impact? That's what I want to understand. Like now, this is the question in the market. Okay, this is
Mhm.
what the clients are asking. Are we gonna see the same impact again when Bank of Japan is gonna interfere, or now because we are expecting it a little bit more because they've done it before, so there won't be any panic. The stock market is not gonna react in a
Yeah,
crazy way. The same is they will not panic as simple as it is.
not
So, what do you
necessarily.
think? Do you think we're gonna see that panic or not?
Not necessarily, because again, we know that the markets always try to price in future events in advance. The central bank or the Bank of Japan last time when they actually raised rates, it was a surprise. Plus, I mean, the dovish tone that they gave us, and they'll have to cut on their asset purchases. That was not expected. So this is why we saw the big impact. Now, the next decision, they're so far at least they're hinting about a possible rate hike again, which basically explains why the dollar yen went down also during last week. I don't think so. It's going to be like a panic mode, or it's going to be a panic reaction, because the market already is ready for the Bank of Japan to increase rates again, even though also on the other side, the market is also ready for the Federal Reserve to start cutting rates. So I think this will actually play kind of in a very orderly fashion, I would say, for dollar yen and for Nikkei 225, at least in Japan, until we see any new evidence. But I don't see any kind of like panic anytime soon.
That's good. That's good. So at least now the market understands that do not panic this time. But by the way, if the break of 142 or 141 is going to be huge, because this is going to open the doors to retest the 137 and then a lot of other supports after. So we'll be looking forward, and I guess we're going to discuss it next week, unless we do an urgent meeting as well. Ourselves.
Let's hope for no emergency meetings, unless if this is like a good, volatilities.
Yeah, I agree. But the beauty of the market nowadays is like euro dollar is still trending up, still respecting the trend. We already broke 111. We're heading to 112, 112.75. We have a New Zealand dollar that we discussed as well before. It's totally respecting the trend as well, and heading for the I think 62, as far as I remember, the 0.62. So there is a lot of resistance, or actually we already reached 0.62 for New Zealand dollar. So if we break the 62.30 now this is gonna be the retest. So it's gonna give us the way to retest the 63, 64 after it. But it's going quite strong as well. We're trying to do a correction where we are at the moment. Let's talk the most important question, or the second most important, is about gold and silver. Gold and silver are reacting in a weird way. It's a nice way for some. The others that couldn't understand the market well, for them it's a little bit weird. So it's still at the top. It's still overbought. It's still tempting. Like, it tempts you to buy it, but it's too expensive. So what to do?
It is definitely too expensive. But here's the thing. I mean, people should not also underestimate the idea of, or not the idea, the move that we saw in the dollar index over the past few days. And the break on the weekly, the break on the monthly that we might actually be seeing at the end of this month also, it would be the first, if I'm not mistaken, the first monthly close below the 102 since 2020. And this would basically opens the way for even a much weaker US dollar. Even though that the Federal Reserve will start cutting rates, this does not necessarily mean that the dollar would actually continue weakening, because the move that we're seeing right now is basically the market is pricing in what the Federal Reserve is going to do in the next at least 3 months. But on the other hand, commodities in general, we're not just talking about any kind of just dollar weakness, but you have also at the same time, central banks are still buying. Yes, they're not buying as much as they used to do. In addition to that, the regional tensions here in the Middle East still plays a big role. At the same time, if you look back in history, every time the Federal Reserve start easing the policy, it also was translated into another bullish trend. Not to forget also that as far as the U.S. bond yields are even going lower, the more it goes lower, the more the benefits will be for metals. And this is basically what we're seeing. And now silver is about 30, and this would be also, if we break above the 30 and we close the day, that would be also another positive factor.
Yeah, well, finally, silver started to react in the past 2 weeks, and we are at the 30s now. Hopefully, we're gonna make a new high on silver and make everyone relax a little bit regarding that.
I would love to see that.
Yeah, exactly. Me too. Let's discuss a little bit the major indices. So Dow Jones, S&P, and Nasdaq. So we can see that all of them, they're trading above the moving averages, which is obvious. Nasdaq we have NVDA earnings this week, so this is going to do a big effect on the market, and this is something expected at the same time. But at the same time, we can see that there is a bit of uncertainty in the chart, where the past couple of days it's been kind of like relaxed, waiting for the for the move itself, like waiting for some news to see what's going to happen. And that same for S&P. For me, like the most stable is just Dow Jones, and the most reasonable and logical moves that we've been doing lately. When do we expect the big correction, or the correction, or the small correction, or something that can at least make us feel that, okay, fine, now we're back. We are on soft landing or not soft landing. It does not matter.
Here's the thing. I mean,
we've had one in the panic, the Black Monday. This is one. We're gonna have another one. And when would it be? Is it at the rate cut? Before the rate cut?
I mean, I think it might be most likely before the rate cut, just because we're also running out of time now. I think it's going to be before the rate cut. Also, don't forget, we have to wait for it and see like what the GDP data are, because also after the revisions that we saw and the most likely revisions that we will see going forward, I think this might be one of the catalysts. But we'll have to wait for NVIDIA first. And to me, even for S&P or Dow Jones or even Nasdaq, as long as we are away from record high, this could be a potential short for whoever wants to to bet against the U.S. stock market. But I still think that any kind of correction, we're talking about a short-term correction just to adjust, or at least it's a healthy correction before we see the continuation of the trend. So in a very short answer, be mindful of not to basically chase the market, but also it is much better strategy to wait for a correction before you start buying on dips.
Perfect. So guys, we'll see you next week on Monday. Discuss whatever happened this week, and thanks a lot, Nour.
Have a good day.